it good to finally be in this room, the third Tribeca Future Facing Commodities Conference? I'm very excited, and I know most of you are as well. My name is Christina Morrissey. For those of you who I haven't been fortunate enough to meet yet, I will be, for the next couple of days, your host and your MC, guiding you through the events. It's going to be fascinating. It's going to be a high-powered ride into the future of investing, innovation, and those critical minerals that are powering it all. Now, I know a lot of you have flown in for this event. We've got investors, we've got deal makers, we've got company leaders, and you're certainly not just here to listen. You are here to connect and to have those conversations with people who may make you leave this area a little bit more fortunate than when you arrived at the conference. Now, I'm going to be with you the whole way, keeping things running smoothly, hopefully to time for the majority of it, because we do have our one-on-one meetings in the other room as well, which I'm really, really conscious of. So a couple of things. We've got an incredible lineup of speakers, panels, companies. We're talking through decarbonisation, materials, capital strategies, ESG trends, and how that global supply chain is changing in real time. But I'll keep you up to date on that as we progress through the morning. So whether you're here to sharpen your edge, whether you're here to find your next big investment, or simply connect with the people that get where all this is going, you are certainly in the right room this morning. And what I'd like to do to start the event is to introduce you to one of the individuals who is responsible for this event and the creation of this event. His name is Scott Clements, and he is, of course, from Tribeca Investment Partners. Scott, the floor is all yours, sir. Please make him very welcome.
Thank you, Chrissy, and good morning, everyone. Thanks for joining us. And we had a really good day yesterday for the gold event, and big crowd of people, some great companies. Today is hopefully going to be just as interesting. And we've got high purity alumina, vanadium, uranium and nuclear sessions. There's a big clean tech session in Auditorium 2 this afternoon. So hopefully something for everyone. And if you're an investor, please go and talk to the companies and set up meetings and keep them busy and happy. So first off, just wanted to thank our sponsors, North Point and MST Financial and SRK and Intertech and all the others that help make this possible. So please show them a bit of love, talk to them, ask them about their business during the course of the day and the drinks. And then I'd also like to thank the Vertical Events team who put on this event, AJ and Gloria and the team. They do a great job. They make everything work and easy for the rest of us. And for those of you that know Vertical Events, you'll know the patriarch of the company, Stewie McDonald, is usually here harassing hotel staff and running around. But he had a serious health scare last year, and he was on the mend but had a bit of a setback on the weekend. So unfortunately, Stewie couldn't be with us, but I'm sure he's watching and sending notes to AJ about things that AJ's doing wrong. So Stewie, we'll miss you, and we'll see you next year. So I think that's that. So I'm just going to set up the day a little bit, and first a quick infomercial on Tribeca for those of you that aren't familiar. We've been managing people's money for more than a quarter of a century now. We are based in Singapore and Australia and very focused on Asia-Pac as a firm. We run mainly public equity focused strategies in Australian equities, in natural resources, and we have some thematic funds. We have a nuclear energy fund. You'll hear from Guy Keller later on. I don't think he's here. I think he's in a meeting. We run a couple of Asian strategies here in Singapore. We've got John Stover, runs our Asia Credit Fund. He'll be up later. And Suzanta Mazumdar runs our Asia Infrastructure Fund. You'll see him later as well. We've also got our group CEO, Adam Lavis, over here. And our head of marketing, Alex Lupus, is wandering around, going to try and sell you some fun products. So look out for him. And then I run our corporate advisory business, and we have a private wealth group as well. So our focus is on trying to find good companies and run by good people and give them capital and hopefully have a long-term advisory role with them as an aligned shareholder. So enough about that. I was sitting down trying to think about what to talk about, and this is the third year we've run this conference, and so we all sort of forget what happened in the past, and so if I take a step back and think about what the world was like in April 2023, there were some things that were similar to today and some things that were quite different. So at the time Russia just invaded Ukraine, everyone was getting used to it, but it had created this focus on energy security, which was quite new. We had a very traditional U.S. administration in power, and I think that probably made people think that the post-World War II geopolitical order was going to stay the same forever, which is clearly wrong. We had the Inflation Reduction Act signed right before, and everyone here at the conference was trying to understand how that would work and how you could get access to those funds and how you had to structure projects and investments. There was a clear move to diversify supply chains out of China, and which was throughout the Western world. We had battery material prices at all-time highs back then. We had a lot of clean tech investment going into the market, and China was quite weak, both the equity markets and the property markets. We'd seen an increase in interest in investing in data centers, which was just starting to accelerate, and you had big institutions like Blackstone and others setting up big mandates for that. We saw more interest in nuclear power coming from a wider range of investors and end users. And just to remind everyone who didn't buy the stock, NVIDIA was only trading at $27 versus $110 today. So the AI theme was just getting going. ChatGPT had just started to become widely used, and obviously it's accelerated quite a bit over the last couple of years. So I guess the question is, what's changed and what's stayed the same over the last couple of years? First of all, the things that haven't changed, we continue to see growth in EVs and renewables, which has been very much led by China in terms of increasing volumes, reducing costs, and improving technology. If you look at EV production and solar demand and installations on those two charts, that trend is clearly in place. We've seen a continued rise in global power consumption. After 3 decades of increasing energy efficiency had basically reduced power demand, we've had this rapid increase in the last few years, which has been driven by electrification, data center usage, and onshoring to some extent. So that trend has continued, and we expect will continue. We've seen clean tech investment continue. S&P put out a number earlier in the year that they are forecasting $670 billion of investment into clean tech this year in 2025. And that will be more than the investment in upstream oil and gas this year for the first time ever. So clean tech investment is definitely continuing, but it's changed a little bit in the sense that the money is more focused on working with industry and strategic end users, and very focused on a path to revenue. So it's sort of this imperfect but better model, and is it a good business? But the funds are still flowing for sure. So what's changed? So that lithium chart kind of says it all. Back in April 23, we were right at the top there, which was evidenced by the number of lithium companies we had at the conference at the time. And as you can see, the bottom has just dropped out of that market everywhere. And we are in the course, we are bottoming out. The question is how long it will take. We're seeing supply coming out of the market and rationalization. So the only question is how long will it take for the market to recover? It's pretty obvious to us that the Chinese property market is bottoming out. home sales are picking up, prices are recovering, foreign investment is starting to come back. Again, there's a lot of work to be done on the balance sheets of these property companies and deal with debt and creditors in some instances, but we're clearly in the course of working out that market. And of course, the biggest change is what's happened in the U.S. and this big geopolitical earthquake that's shaken the world in the sense and basically unwound post-World War II geopolitical norms within a couple of months. The interesting thing is that even in all this, there's been more focus on critical minerals by the Trump administration than I think people expected initially. And it's intersecting with geopolitics with respect to Ukraine, Greenland, the Panama Canal. So that is a big shift in the world, and I think today's Liberation Day or whatever, we all find out what actually happens with these reciprocal tariffs. But I think everyone's very confused as to what it's all going to end up with. But a very, very big change in the sort of investing paradigm that we've gotten used to. And then this is more of a question. We've been wondering when we were going to get a rotation out of digital economy tech stocks into real economy stocks. And the news that came out at the end of January with DeepSeek's model being so much more cost-effective and evolutionary than the existing ones could be the canary in the coal mine. It's probably too early to say. But if we do get this rotation out of the digital economy into the real economy, that's going to have pretty profound implications for investors. And so a subject near and dear to our hearts is, what does all this mean for the upstream? And I think the case for the upstream, and you can always debate these things, but if you look at what's happening in China now, the disappointment for the commodities markets over the last couple of years is we didn't get the traditional Chinese stimulus coming out of COVID that we normally would with respect to large-scale infrastructure investment and things like that. But it's now clear that the Chinese government is going to be continually announcing stimulus over the coming year. They've announced a lot already, and the response to the tariffs will probably breed another policy response. One of the ways they'll do this is there's a lot of increased spending on the Chinese power grid, which is very supportive of copper prices. We see that as continuing to help the Chinese grid support the vast amount of renewable power that's coming in there. And if you look at the market positioning, really we've had a couple of head fakes, I guess, in the last 6 months. And the good thing about that is it's severely reduced positioning. If you look on the right-hand chart, yellow is long-only funds, and red is hedge fund holdings of commodity equities. So the market's set up positionally for a rally. And then on top of that, the multiples in the sector are very low. We're currently around half of EV to EBITDA. And in a more bullish environment, normally the market will trade closer to 1 times EV/EBITDA. On top of that, the structural deficits in many commodities, we've got copper and uranium here. You can debate around the edges, but I think it's clear there is a structural supply deficit there in these commodities, and that's going to further underpin a rally. And one of the big issues in the sector is always underinvestment. And particularly, these are 2 charts on copper. Well, actually, the left is diversified. The right hand is copper. And the big message in this chart on the right-hand one is the lack of really large discoveries that have been made in recent years. And if you think about all the factors that are creating future demand for copper, it's hard to see where the supply is coming from because there just aren't a lot of big discoveries out there. And as most people know, it just takes a long time to get into production for mining assets. So currently more than 15 years from making a discovery to producing. That could get better. There's very supportive noises coming out of governments in the US, Canada, and Europe about fast-tracking permitting processes. But it's safe to say that that timeline's not going to come down dramatically in the near term. And so it's always worth reminding people that in a bull market, the people that make the most money are the ones upstream. So the same as in China's industrialization and the massive boom in steel production created the two wealthiest people in Australia. The upstream is where you tend to get the most generational wealth created. And even in a bear market, I mean, the first year we had this conference, we had investors invest in a lithium company called Azure, and within a year it had gone up 10 times and been taken out, and people made a lot of money. And so something to keep in mind, over the course of the next couple days, you should walk next door, talk to the companies, and try and find the next 10-bagger upstream. So I think that's it for me, and I hope everyone has a great couple days. Enjoy the sessions, and we'll look forward to catching up with everyone around the conference. Thank you.
Thank you very much, Scott. And as Scott mentioned, Stu McDonald from Vertical Events, who has just reported back to me on the phone. He's sitting in our boardroom at our headquarters at the moment watching this and wishing that he could actually physically be here in person, and wishing us all the best for the next few days. Now, to officially welcome us here to this event, we couldn't do a lot of what we do without the special help of the Australian government when we travel internationally with Vertical Events. So I'd like to welcome, please, His Excellency Alistair Cox, please, to the stage to officially welcome us here on behalf of the Australian government. Please make him very welcome.
Well, good morning, everyone. Good morning, ladies and gentlemen. It's a great pleasure to see you all again at this Tribeca Future Facing Commodities Conference, and thank you very much to Tribeca and to Scott Clements and to Vertical and the other conference organisers, Resource Connect Asia, who invited me back here again this year. And I'd like to welcome all of you who come from outside Singapore to Singapore for this conference. I understand this is day 2, so I hope that the conference is providing you with insights and a network of people to meet. As Scott suggested, and when I sort of accepted to come back again, I very fully realised that we're in a time of very considerable flux, I think, in global markets, and so it's a time of uncertainty. So I think it's a very good time for investors and market players like many of yourselves to be networking actively to try and make judgments and get access to the latest data to make determinations about what your future strategies will be. I mean, everybody here, I think, understands how important, despite those uncertainties, critical minerals and rare earth elements are in today's and in tomorrow's world. They're going to be essential ingredients for the energy transition. And I suppose the question is, what is the timeline for that transition? But nonetheless, I think that transition is underway. There's obviously going to be many twists and turns along the road, but that transition is happening. And these minerals are key inputs for future and for current and future technologies, including electric vehicles, semiconductors, the defence and aerospace applications. And global demand for these commodities is set to increase over the period ahead. And I think, as Scott referred to, we can see the interest in them, even in the uncertainties coming out of the United States. You can see the interest in critical minerals in the US administration, and certainly that's replicated in Australia. The International Energy Agency's 2024 Global Critical Minerals Outlook predicts a doubling in minerals demand by 2040 under existing and stated policies, with demand for lithium growing fivefold, demand for graphite nearly doubling, and demand for nickel, cobalt and rare earth elements increasing by between 65 and 80% over the same period. Under some of the more ambitious decarbonisation scenarios, and I suppose the question is, what level of ambition and timeline do we put on the decarbonisation process? These demand forecasts could be even higher. And this shows just how important critical minerals and the critical minerals sector is and will be to the world economy and to strategic supply chains, both in this Indo-Pacific region and globally. Ladies and gentlemen, Australia has, as many of you will know, an abundance of the sorts of critical minerals that the world needs and will need. We're the largest producer of lithium in the world, producing 49% of the world's supply. We're also the fourth largest producer of cobalt, with 2% of global production, the sixth largest producer of nickel, with 4% of global production, the third largest producer of manganese, with 9% of global production, and the eighth largest producer of copper, with 4% of global production. Alongside our geological endowments, Australia can draw on significant expertise in extracting minerals and have a strong track record as a reliable producer and exporter of energy resources. Our stable and predictable regulatory environment makes us a good place to do business, and we hope an attractive destination for foreign investors. All of this puts Australia in a position of opportunity, but also of global responsibility to help meet the growing demand for these commodities. The Australian government has been working to capture this opportunity by investing heavily in our critical minerals sector. And while we are now in an election campaign, all of the programs I will mention here are now existing policy and were announced or enacted during the term of the present government. The Critical Minerals Strategy to 2030 was released in 2023 and sets out the government's vision for the sector, including a focus on developing strategically important projects, attracting foreign investment and partnering internationally, unlocking investment in enabling infrastructure and services, and growing a skilled workforce. The Critical Minerals Strategy sets out a list of, or has lists of 31 critical minerals and 5 strategic minerals that are eligible for varying levels of government support, including cobalt, lithium, manganese, nickel, and rare earth elements. These lists were developed in close consultation with industry and will be reviewed at least every 3 years. Since the strategy's release, which, as I said, was in 2023, the government has continued to introduce measures to support our critical minerals sector. The Resourcing Australia's Prosperity initiative commenced in July of last year and is a 35-year, $3.4 billion investment, will be a project that operates to further advance our interests in building on our comparative advantages. It resources Geoscience Australia to comprehensively map the onshore potential of all Australia's 36 critical and strategic minerals, as well as groundwater and storage opportunities for hydrogen and carbon. The data sets this initiative generates will inform decision-making by industry and support resource development and future private sector exploration and investment. So you can see how important that kind of data is about what is actually, and greater in sort of precision about what minerals we actually have and where and in what quantities. Export Finance Australia's $4 billion critical minerals facility can provide finance to projects that align with the government's critical minerals strategy and support Australia's national interest. The Australian government has also passed legislation just in February this year to establish a $7 billion critical minerals production tax incentive. This incentive provides a refundable tax credit on 10% of eligible processing and refining costs for Australia's 31 critical minerals. It will be available for production occurring between 2027 and 2040 and can be claimed for up to 10 years. The government is also providing support measures for the production of green hydrogen, iron and aluminium. This all forms part of the Future Made in Australia plan, which aims to seize the opportunities of the global energy transition and ensure that Australia can play an integral part in supporting the region's transition and by helping to develop the critical mineral supply chains that are needed over the transition period. Ladies and gentlemen, Australia is not operating alone. It is only through working together with like-minded partners and with industry that we can create a strong global critical minerals and rare earths industry. So we're collaborating with the US, EU, UK, India, Japan and Korea on critical minerals through a range of initiatives and partnerships. We're also leading in multilateral forums such as the IEA's Critical Minerals Working Party, the Sustainable Critical Minerals Alliance, and as a founding member of the Mineral Security Partnership, which identifies strategic projects and works to attract private sector finance to bolster critical mineral supply chains. But, as we all know, it is the private sector, including project developers and investors, including many of you in this room, who are essential to bringing new supply online. And events like this conference play a valuable role in promoting development of new projects across the sector. Australia is well positioned to meet the growing demand for critical minerals, and we are proactively supporting industry to develop new supply, as I outlined in my remarks before. In addition to measures that I've outlined, the Australian Critical Minerals Prospectus provides an interactive tool that showcases over 55 investment-ready projects across Australia. So I encourage you to look it up and speak to my colleagues at the Australian Trade and Investment Commission, Austrade, about the available opportunities. I wish you all a very enjoyable and useful conference. As I said, I think at this time in global affairs, it's a very vital conference to come to. So thank you very much. Thank you for the invitation, Tribeca and the conference organisers, for me to be here today, and I hope you have a very successful conference. Thank you.
Thank you very much, Your Excellency. Just a quick few bits of housekeeping I'd like to point out before we jump into it, or dig into it, as it were. If you'd like to avail yourself of our free Wi-Fi, the details are there, so that is the password behind me if you'd like to have access to that. And we do have an app for the conference as well, which can link you through to everything that's going on, show you where those private meetings are available, and also give you the contact details of our speakers who are up on stage, and that is my next job to introduce to you all. For my speakers that are in the room, I will remind you of our rules of engagement. You have 15 minutes total up on the stage. You need to get up from the stage, you need to get off the stage, and I'm going to be very, very strict with my time. So you will hear a bell ring at 2 minutes, I'll stand at 1 minute, and then I will stand very uncomfortably close to you. Rob Williamson, MD, would you like to come and join us up here on stage, please, sir? We're going to go to a little trip down to Alpha HP first up this morning, everyone, Alpha HPA. So they're a company supplying high-purity alumina products to the semiconductor, the lithium-ion battery and LED sapphire sectors, and they provide you with a unique exposure to these technology-driven sectors. And this fellow himself is a very unique individual, and he really embodies the sorts of companies that we're trying to bring to you here as part of the conference. He champions emotionally intelligent leadership, and that translates to this wonderful organisation that is doing some pretty incredible things with their innovation and their tech. So please make Rob very welcome, and let's listen to Alpha HPA.
Thank you, Chrissy. So we've got 15 minutes. I presented this last week in 20, so buckle up. We're going to make this as fast as we can. So we'll blast through some things, and I really want to spend some time on the proposition, where our products go, rather than dwelling too much on project and all that kind of stuff. So apologies if you wanted to get into that. Happy to chat later. So we are a technology-driven specialty chemicals business. We have a novel technology that uses solvent extraction to purify aluminium, and that aluminium is used in chemicals that are used in the high-tech sectors of semiconductors, LED, EV batteries and so on. So sort of all of those future-facing commodities that we've been talking about. We have a project that is commercialising that technology called the HPA First project in 2 stages. Stage 1 is in production. It's a small-scale commercial sort of facility that is also servicing large quantities for technical qualification. And then stage 2, which is in production, which we'll get into in a sec. So that's stage 1. It's situated in Gladstone, which is in sort of central Queensland on the coast. And you can see Orica, which is one of our business partners and suppliers, a reagent supplier, and Rio in the background, which supplies our raw material. Orica is also a 5% stakeholder in the business and joined the register right after we started up stage 1, which I think was a significant endorsement in the technology itself. This gives you a sense of scale of what's going on inside the facility. We've got Alex there running the SX in the top left-hand corner. And then that picture there of the product is actually a 1-ton order that we set aside for a Korean semiconductor business where we ship that material to. This is actually what we're building now. It gives you a sense of scale in terms of where stage 1 is in the yellow box, and then stage 2 is obviously the large facility there. And we're actually interconnected with Orica because the reagents that we use with Orica and then send back to them are just connected across. So we actually are responsible for about 20% of Orica's output. CapEx is 553 million, and I just would say that His Excellency's comments around those various government funding opportunities, we are sort of pretty much fully loaded into all of those. The Critical Minerals Fund, etc., is all part of that funding package from EFA and NAIF. That's what we're building. The project's on time and on budget at the moment. Excavations are finished, and we're getting into civils in the next sort of quarter and a half. So a little bit about what the products are doing. We really are sort of leaning into some of these AI data center piece. So just a little bit of a driver for what's impacting AI data centers and so on is obviously the power. 40% of the power at these facilities is for cooling, and that's where our materials come in. So our material is very unique, and I think the common thread that you'll see through all of this is that we are leaning into sectors in these markets where our material outperforms everybody else's. So that's where we really compete, and that's where the business really shines. And this is all enabled by our technology. If there's any uranium and thorium fans in the room, you're going to be very disappointed because we ain't got none. It's not in our material, and that's why it outperforms in these semiconductor applications. In particular, this one, which is quite interesting, uranium and thorium emits what's called this is a physics lesson for you, alpha radiation. Alpha radiation is a particle, and it will knock electrons off a circuit, right? So think of, this is my mechanical engineering brain trying to explain something very complicated, but basically when that happens, it causes an error in the performance of the AI chip, and our material, when applied in these thermal fillers to reduce the heat, extract heat away from the circuit, does not impact the performance of the chip. So it actually allows the chip to perform more efficiently, and we have confirmed from some of the largest companies and best, well-reputable companies in the business, in Japan and so on, that it is the best material in its class. And so this is something that is directly enabled by our technology. You'll see a theme around this as we keep going. The next one is the CMP polishing. So CMP polishing stands for chemical mechanical planarization. Our technology is producing an alumina, that high purity alumina, that just outperforms in terms of the way it polishes the wafer. So that little image there looks sort of like a wacky record player. That actually has the little orange piece there has the wafer on it, which the silicon chip is the chip is grown on. And specifically, we're talking about chips that are in the silicon carbide substrates, the sapphire substrates, and the gallium nitride. And these are all power semiconductors. Power semiconductors are a key element of the sort of energy transition. So any piece of equipment that's controlling high power, amperage, voltage, etc., such as an EV power battery, an EV battery pack, solar panels, wind generations, all that kind of stuff is where these special semiconductors land, and so there's a significant demand for these. And I should say that in relation to the semi market, we are seeing continual expansion in the demand for our products in this space, irrespective of what you may or may not speculate in relation to the impact of DeepSeek and all those other things. So what we're seeing in real terms on the ground is that the demand for this material and the material for the thermal interface packaging is continuing to rise, and we've got LOIs in place that are being revised upwards in terms of their tonnage. And so our crystal morphology from our technology again outperforms others in this sector. And so we've actually got a 4,000 tonne LOI in place just recently for this material as well. So the CMP process is a process of polishing the wafer using the slurry, and it's an ongoing thing as they build out the lithography of the circuit. It's just an ongoing, they have to put it back in, polish it off, remove the material they don't want and so on. So it's an ongoing process that they use. We also make batteries safer, and we do that because one of the materials that drops out of our circuit, out of our technology, is a material called aluminium nitrate, and I'll give you a quick cook's tour of that in a minute. But the aluminium nitrate is something that we've solved for, in that we can produce aluminium nitrate at a very, very high purity, like 99.9999%, at a commercially viable cost. Has been a technology out there for a while. There's some PhD papers written on this around how you could use aluminium nitrate to use it as a coating on an anode in an EV. And so, but it's sort of, the technology sort of sat on the shelf since the mid-2010s because there wasn't a commercially viable sort of material like the aluminium nitrate material to be used in that application. You need the purity. It's a very challenging process to produce using traditional methods. So we've come in and we've solved that. We're working with about 14 counterparties in this regard, and we're also working with one of the biggest anode producers in the world on this. And it all ends up in, all the material will ultimately end up in sort of tier 1 OEM type batteries. So we've gotten through technical qualification with this process. It's been sort of 18 months of test work that we've been doing with them so far, and now we're just sort of waiting for further updates from their end users, which is all part of the process. But a really, really interesting technology. And again, the same theme where it's our technology that's doing something that nobody else can, and that's where the value creation is coming from. And then the same again, we can do that same sort of process, but in terms of battery cell case coatings. So you can see here when you use our precursor to coat the inside of these prismatic cells, the image there with the blowtorch, which is actually a test that they do. It's not just something that we're noodling around like a couple of pyros in a workshop. That's actually a test with a 1600 degree butane flame, and then you can see with the aluminium sheet with no protection on it, it's sort of blasted through in sort of 15 seconds, but when we coat it with our material, it's lasted 9 minutes or so and still going. So the interesting thing about this is that it's sort of a net neutral cost in terms of the application, but it gives them more space in the battery. And because of the high purity of the material, it's inside the cell and it doesn't interfere with the chemistry of the cell. So we're actually working with a global automotive OEM on this technology who are developing their sort of battery pack in-house. Then there's the DLE sector, which sort of leans into the sort of lithium piece a little bit. And so again, it's the technology that is enabling this and opening this up, but we make a material called aluminium hydrate, or ATH as we call it. And it is best-in-class performance, again, both in terms of the strength. So when you're using a DLE, it's actually absorbing, or adsorbing is the word, onto the particle. So at a microscopic or sort of nanoscale almost, the lithium ions are getting trapped in the pores of the sorbent, okay? And that's just sort of like a pool filter, I guess, and then once you flush it through with clean water, you pick up the lithium and take it away. And so our material is performing 2 times extraction rates and lasting sort of 1.5 times more. So the efficiency there is really strong, and we're working with a number of counterparties and some big petroleum majors around this. And there's again, it's all in the morphology of our material and how we precipitate it that is enabling it to outperform. It's also worth understanding that this particular application in a DLE sorbent, 90% of the ingredient of that sorbent is ATH, is our material. The balance of it would be a lithium chloride and some other special synthesis that they do in how they produce the final material. But our material would represent 90% of the bulk ingredients for a final sorbent. Significant growth seeing in this market, and as a little sort of fun fact, if you think about the lithium triangle in South America, the existing salt flats, they could get a 35% uplift in their production, the lithium salt flats there, if they were to switch to DLE. And the difference is you get a 2-day turnaround on your yield as opposed to 18 months on the salt flats and the evaporation ponds. So quickly, how do we do it? We have an input material from Rio Tinto. We use for our full-scale facility, we use about 13,000 tonnes of that, and then Orica gives us our reagents. We put that through our solvent extraction circuit. We crystallise it, and that's where our first material drops out, which is the high-purity aluminium nitrate. That is then a precursor for all the other things. And so particularly that front end is really where our USP is. And then the balance of it is sort of relatively common. And there's a lot of particle engineering that happens through that and a lot of know-how through that whole process. A little bit about product marketing and progression. We're working through LOIs, and then they'll ultimately convert to binding contracts. But, you know, it comes back to how our material is delivering on areas where others cannot. And I really wanted to take a little bit of time to explain to you what an LOI really means for us. It's not like an LOI for the gas industry, which are thrown around like lollies. It takes a long time to get to an LOI. So a typical process, you can see we've got a target customer, there's a desktop review, and then small samples and then large samples. And that large sample process, there's a lot of back and forth, which is that sort of back and forth arrow there. I don't have a laser pointer, but you can see there in the middle. And that when the customer's happy with the performance, then they'll start sharing that with their customer. Then they've got that same iterative loop that can potentially happen with their customer. And then ultimately, once that's all satisfied, we go to product qualification. We get a product qualification letter, like I mentioned earlier, and then that is usually accompanied with an LOI. And then finally, the sales contract is converted after that. The point here is that this is anywhere between 6 months to 2 years, right, to get to that point. And so you've built a moat around you and the customer that they're not just going to unravel that. I would describe it as being we're engaged, but we're not quite married yet, is really what the LOI really means. And so we're just in the process of filling out our LOIs that are, if you look at this slide, we want to build out our LOIs so that we can then redistribute the material and create some commercial tension with that LOI rather than just jumping straight into a commercial contract straight away. So there's a bit of commercial sportsmanship around this in terms of how we want to convert to binding contracts at the right time. We have agents working for us all across the globe. There's a significant demand right the way through. I won't go through all the pricing there, but it's there for anybody that wishes to see. 70-odd% margin, $300 odd million free cash. You can see here, I think the pricing, in US dollar terms, we're talking sort of $6.50 operating cost, net of byproduct credits for a $25 per kilo sales price. So the margin's quite healthy, and that's not considering the production tax credit that His Excellency mentioned earlier today. We do have these certifications around ESG. I won't go too much into that. I think we all understand this stuff. the strategic investment we've covered in terms of 5% stake with Orica, and we're also working with an expansion project in North America with them, what we call Alpha Polaris, which is another plant that we're looking to build. And then finally, we have this downstream value add piece that is all around making synthetic sapphire using our material. Synthetic sapphire is a material that comes from HPA, and when you wafer that into wafers, which is then used for that gallium nitride on sapphire semiconductors. So we're sort of moving down the value train in terms of entering into producing actual wafers for that power semi market. Little quick business corporate snapshot. I think it's good buying at the moment. So Chris is giving me the wind up. I've got 10 seconds, so that's about it. So I think I've managed to smash it out. I hope that was like fire hose for you all. So thank you very much.
I want to get you lads to bring it home at the end there. You've got 10 seconds, you make sure it counts, because that is an awesome story. And our next story is an awesome one too. It's got a lot of momentum. And we heard our High Commissioner talk about critical minerals in Australia and their interesting companies that are involved in critical minerals. This is one of them, Chalice. They've just, look, in the recent few months, they've slashed operating costs, they've cracked the code on processing, and they're now backed by both state and federal government in Australia as part of this important critical minerals process. So if you're looking for leverage in the next phase of Australia's resource evolution, this might be one of those players you want to pay close attention to. And this fellow here is Ben Goldbloom. He is the GM of Chalice. Please make him welcome, everyone.
Good morning, and thanks for joining me to talk about Chalice and the Gonville project. This is the leading palladium, nickel and copper development project in the Western world. Thanks to the Future Facing team for having us back here for the third year in a row. I'm going to take you through the latest developments on the project, our new exploration targets, and what else the company has been up to. So who is Chalice Mining, and why should you be interested in the company? We have the 100% owned Gonville project, located 70 kilometres outside of Perth in Western Australia. Gonville has 17 million ounces of PGEs, most of which is palladium. It has nearly 1 million tonnes of nickel and over 500,000 tonnes of copper. This is a large resource on anyone's measure, and the mineralisation all starts at surface. It was discovered in 2020. We're in the middle of a pre-feasibility study, and we started the approvals process in March of last year. We have an MOU with Mitsubishi. We work closely with them on trying to find the best outcomes for the project. Mitsubishi are a first choice partner to have on a project like Gonville, and they're well known as a foundation member on a number of the biggest and best mining projects around the world. Both palladium and nickel are trading at cyclical lows. The Chalice stock trades with a very strong correlation to both of those commodities. And so right now, the Chalice share price is trading with an enterprise value of $17 per resource ounce. That is very, very cheap for a precious metal of in-ground resource. We see this as a very compelling counter-cyclical investment opportunity and very well suited to a macro Trump 2.0 environment. The balance sheet is strong. We have $90 million in cash and listed investment. There is no debt. We are very prudent with our expenditure, and this balance sheet sees us well funded right through to a targeted FID in 2027. So Chalice is listed on the ASX. It's part of the ASX 300 and has a strong institutional shareholder base. The last 18 months have been a challenging period for our shareholders, but the register has been really stable throughout that time. Our shareholders take a long-term view because they see the compelling leverage that the project characteristics have to a turnaround from these stubborn multi-year lows. And as history has always shown us, commodities do always recover. In February of this year, we had a big breakthrough on our MET release and our flow sheet. On the back of that announcement, the stock jumped 30%. Our trading volumes jumped about 80%. We went from about 3 million shares a day to about 5 million shares a day, so liquidity is strong. This was a real reset for the project, which we'll talk about a little bit more later on, and it was well covered by the sell side as well. So I mentioned that Chalice has a strong correlation to the palladium price. So why would you want exposure to palladium, and why do we think that this precious metal is at a cyclical low? So think of palladium as a very niche market. There's only about 9 million ounces produced and recycled every year. This is in comparison to gold, which has about 10 times that amount. So this niche market is very susceptible to sharp changes in demand and sharp changes in supply. And the drop-off in the spot price since 2022 has largely been driven by the sentiment around growth in battery electric vehicle sales, and also this destocking phase where above-ground stockpiles are being run down. But the sales of battery electric vehicles has hit a plateau, and market share is not moving above 20%, and this destocking phase is starting to run out. We're hearing that these stockpiles are just about finished. So each time the spot price in US dollar terms hits about $900 to $950 an ounce, it hits that threshold and bounces back. So it's almost like it's hit this natural floor. So when you look at the palladium price and the palladium market, your downside is very much limited. On the demand side, 85% of palladium goes into catalytic converters. Catalytic converters are used in petrol engine vehicles and hybrid electric vehicles. If you go back 3 to 4 years, all the sentiment was around that we'll all be driving battery electric vehicles. There's no catalytic converter in a battery electric vehicle. And so the long-term demand forecast of palladium was that it was going down to zero. But if you fast forward to today, the data is telling a vastly different story. Yes, we did have strong growth rates in battery electric vehicle sales when governments were providing strong incentives to buy these new vehicles. But as those incentives were removed, the battery electric vehicle market share sales plateaued. It plateaued, and then we saw Chinese manufactured battery electric vehicles start to hit the market, and we saw another spike in growth. But in the last 6 to 8 months, battery electric vehicle market share has plateaued at 20%. Why is that? Consumers are going back to their petrol engine vehicles or buying hybrid vehicles because of higher than expected running cost, range anxiety, and just insufficient charging infrastructure in most global cities. Western manufacturers are adjusting to these consumer preferences. They're scaling back their BEV production and scaling up their hybrid production. Surprisingly, and perhaps this is the opportunity for investors, is that the growth story in hybrid electric vehicle sales is still not yet reflected in the consensus palladium demand forecasts. On the supply side, 85% of palladium comes from Russia and South Africa. The mines in these countries are decades old, they're deep, with all of the best ore mined many, many years ago. At these current spot prices, about 30 to 40% of the sector is currently losing money. So what happens when mines are losing money? Companies move towards survival mode and they stop investing capital in these mines to at least maintain production, and they most definitely do not invest capital to increase production. In reality, what's happening with these mines is they're starting to curtail the unprofitable ounces, protect their cash flow and protect their balance sheet. And that was best highlighted by Sibanye-Stillwater halving their production at the Stillwater mine in Montana for the calendar year of 2025. Off the back of that announcement, the palladium price moved about 20% in a matter of weeks, and the Chalice share price moved about 80% in the same time. And this demonstrated the leverage or the susceptibility that this palladium market has to supply shocks, and also the leverage that Chalice has to these movements. So moving more to the Gonneville project in more detail, Gonneville has scale, long life and is low cost. It has a revenue split of about 50% palladium, 20% nickel and 20% copper. The remaining 10% comes from gold, platinum and cobalt. So it is largely a palladium exposure with good byproduct credits from the other metals. And that's what allows it to be predicted to be one of the lowest cost PGE producers in the Western world. It's 70 kilometres outside of Perth in a low-risk jurisdiction surrounded by good infrastructure. We started the approvals process in March of last year, and that approvals process has been largely de-risked by the acquisition of 22 square kilometres of farmland surrounding the project. It's really important to emphasise that the whole mining development envelope of the Gonville project is on Chalice farmland, Chalice-owned farmland only. In Australia, there's a bit of a rule of thumb that if you can go from first discovery to first production, or discovery to first production in 10 years, then that is an excellent result. We just celebrated our 5-year anniversary of the Gonville discovery, and we are well on track to meet that timeline. In the first 5 years, we've drilled out the resource, we've bought the farmland, we've put the right team together to go and build this project, and most significantly, we've now developed a simple flow sheet which has transformed this project from being what was previously considered a speculative development play into an actual development play with a clear pathway to cash flow. In the next 5 years, we're going to lock in the infrastructure corridors, we're going to secure all our necessary approvals and our offtake agreements, we'll finalise our financing and all the way on the pathway to a final investment decision in 2027. So the flow sheet, and this was the key area of the breakthrough that I mentioned back in the middle of February. This is a simple, stock standard mineral processing flow sheet that has been built routinely over the last 100 years. Previously, it was thought that our nickel grade was too low to upgrade into a saleable nickel concentrate. And so that was forcing us down a path of further downstream processing using a hydromet facility. The hydromet facility added capex, it added opex, and it added complexity. Recognising that we needed a more simple operation that was more suited to a low price environment, our metallurgists kept tapping into new expertise, adjusting the various factors in the flotation circuit, like a reagent mix, the grind size, the froth height, amongst a few others. And then over 600 flotation tests were conducted, and finally we cracked the code. So we now have this flow sheet that can be applied across the entire resource that produces a saleable copper concentrate, a saleable nickel concentrate, and a PGM doré bar. This pretty much looks like a typical gold processing plant. You can see the recoveries there just below the flow sheet, and most notable about these recoveries in those early years of the project, when you need to pay back that capital, our recoveries are much higher. They're much higher because they're driven by the high grade at the top of the resource, and then over time those recoveries will slightly reduce in line with the grade profile. So in summary, what did this breakthrough give us? Well, it gave us reduced capital costs due to the removal of the hydromet process, reduced operating costs because of the removal of the hydromet process and lower reagent consumption, and just a more simple, lower risk type operation overall using proven industry standard technology. Yes, we'll see slightly lower recoveries and slightly lower payabilities, but that is largely offset by the other benefits, and overall the project margins are much better. This is a project that is built for all seasons, and when you look at the cost curve, this is based off our 2023 scoping study, and you can see that we're well entrenched in the second quartile of that cost curve. With the improvements that we've just made in the project, there's now downward pressure on that all-in sustaining cost, so we'll move even further down with better project margins. Even today, while 30 to 40% of the sector is losing money, if we're in business right now, we'd still be making good margins. So moving on to the second pillar of Chalice, we've just been talking about the Gonville project, but then there's also 8,000 square kilometres of unexplored land in the West Yilgarn. And the Chalice DNA has been very much to be attracted to large land-scale packages in frontier areas, and that's what attracted us to the West Yilgarn in the first place. The West Yilgarn was previously mapped as barren granite with no outcropping mineralised geology. Our geologists challenged that theory, went and did some bottom-up exploration geology involving some mapping and soil sampling, and that's what led to the discovery of Gonville. We're now using those same techniques to go and explore the rest of the 8,000 square kilometres of which we own, and we've got the first mover advantage in this new area. The focus now is on gold or copper gold type discoveries, and we're very excited by the geology up at the Barra Barra project. The geology up at the Barra Barra project is your typical greenstone geology that you see in the southwest, and this is the type of geology that hosts large-scale gold discoveries like the Newmont-owned Boddington, which has 40 million ounces. We did our first round of air core drilling at Research West and Warspite. They're the two targets at Barra Barra. We confirmed the thesis that it is greenstone geology. We went back for a second round and just finished that last week, and we're looking forward to getting those results in 3 to 4 weeks' time. These two targets are surrounded by a radius of 100 kilometres. So if we just get one economic hit, we're going to open up a whole new belt in an area that is pretty much owned all by Chalice. I'm about to get the wind up, so I'll just hit the high notes from here. We've got a PFS which is due in the September quarter of this year. Post the PFS, we will get started on our offtake agreements and our project finance, and in parallel we'll continue on with the approvals process. And so in summary, if you're a believer in the slowing of BEV sales and a continued recovery of the palladium price, have a look at ways to get exposure to this. There are limited ways to play this trade. Gonville has scale, long life, and is low cost. It is clearly the leading investment opportunity to get your best leverage. That'll do me.
Well done, Mr. Goldbloom. Would you please make him welcome? Thank him very much, everyone. Interesting play, that one. Now, if you look onto your programs, if you've got the hard copy, or on your app, if you've downloaded that one, you will see we have our first keynote speaker up next, and the topic is vanadium as a critical mineral. So we know it's a critical mineral. We know it's essential for strengthening steel and advancing battery technologies as we move towards that cleaner, greener future. And this fella here knows more than all of us in the room put together. This is the fabulous Terry Pearls. He is the president of TTP Squared LLC. I want to make sure I get all those letters correct. And he is here today to share his knowledge and explain to us why vanadium would make a good play for us as an investment. Please make him welcome.
Thank you, Chrissy. Thank you very much. It's clear who's in charge here, so I'm going to do my best to get us right on schedule here. There's a ton of slides in this presentation. I just wanted to put the data out there. We're not going to go through it all here. If anybody's interested in a deeper dive, we'll be in the exhibition hall right at the back, and happy to have a chat. First thing to look at here is historical vanadium prices, obviously very unstable. A couple of takeaways here. We see these peaks every now and then that are really have been a result of supply and demand side issues depending on the peak. It's important to note the shoulder-to-shoulder width of these peaks is typically 12 to 18 months. The vanadium industry is really resilient in its ability to expand production when the demand curve changes. And pay attention to these numbers, the mean and median prices, $7 to $8. This is on a nominal range. Looking at the data differently, we see, the price today is near the low point of the historical price on a nominal basis. We're looking at long-term data, so let's inflate it. See the same curves here. Now we see, mean and medians at a higher level, $10 to $11. Peak prices over $50 a pound of V2O5. And on an inflated basis, we're really at the bottom of the cycle here. There's not many months where it's been lower price than what we've got right now. We can look back, longer period, back to 1980. And on a real basis, here we see average prices of $8 to $9. So let's remember those numbers as we move through this presentation. Right here's my effort to put together a cash cost for the industry. And what this is demonstrative of is the fact that the majority of the production is underwater right now from a cash cost standpoint. About half, or a bit more than half, of the vanadium in the world is consumed by the Chinese steel industry, specifically rebar for construction, and Scott's given us some data on the situation in China in terms of property development. and this is what's transpired in terms of rebar production in China. So the major application for vanadium is about 40% lower than what we saw a few years ago, and that's really the driver for very low vanadium prices today. Here we can look at vanadium production, vanadium consumption, proxy for vanadium consumption in Chinese rebar, and what's happened to the price as a result. Pretty good correlation there. The big thing for vanadium today is energy storage. Vanadium flow batteries for grid-level, long-duration storage. This is a market that's just developing now as we get to the point where the ratio of renewable power on the grid, renewable but intermittent sources of power, breaches 30%. We've got serious stability issues on the grid. This vanadium flow battery is the ideal technology. When we look at the ability of the technology to perform in these situations and the economics of it, it's an extremely strong case for these systems. Right now, China owns the market. China has a lot of vanadium. They're making massive investments in vanadium flow batteries. They have significant amounts of renewable energy on their grid, so they see what's coming, and as usual, they're out in front here and building out the supply chain. Looking at what's happened to the vanadium demand, historically 90+% goes into steel. We see in the last few years that energy storage has become an important segment of the market, and this segment's growing at about 50% per year right now. Some data on what some people are expecting for increase in vanadium demand. Ronke Power in China is the leader in this space right now as far as flow battery goes. I was there last week. They've got the first gigafactory for vanadium flow batteries in operation. They're going to deploy about 3 gigawatt hours of capacity this year connecting to the grid. That's about 15,000 tons of vanadium, or more than 10% of global demand right now. There's a lot of reasons why vanadium flow batteries their day is here, and it's really the confluence of the maturation of this technology so that the costs are coming down, coupled with the fact that we're seeing the emergence of a real long-duration storage market as a result of the renewable but intermittent sources of energy on the grid. When we're evaluating different technologies, there's a lot of factors to consider. Economics is obviously one of them. It's not the only issue. Looking at microgrids right now, vanadium batteries really, on a levelized cost of storage basis, are the lowest cost systems out there. We look at the levelized cost of storage and capital costs here. Everyone's really focused on capital costs. The thing you have to remember is that the vanadium flow batteries are still immature. There's 1 gigafactory in the world, and as the supply base grows, we're going to see that capital cost drop dramatically. If we look at the more important levelized cost of storage, we already have a very strong case for vanadium batteries in many applications. This is the big application with renewable energy in the middle of the day, solar panels kicking out a lot of power, but we can't use it all. Without storage, we have to produce and consume electricity at the same rate. Right now, lithium batteries are quite popular in this space, but as we get more and more renewable energy, we need to think of longer duration discharge, and that's really where the vanadium battery shines. So again, here you'll see that for renewable integration, pumped hydro, compressed air storage are low cost, but they're geographically landlocked. There's only so many places in the world you can build these systems. You get beyond that, and now vanadium systems from a levelized cost of storage are really, really competitive, maybe more than competitive with lithium ion. And again, the capital cost is something that's coming down year by year. Interesting slide here from our friends at Rio Tinto, looking at vanadium batteries in mining operations, and what this demonstrates is as we get out to that longer duration beyond 4 hours, the economics of the vanadium batteries really start shining. The DOE's published some data saying that we can get down to about 5.5 cents per kilowatt hour. This is an interesting chart. It's an experience curve looking at the cost relative to capacity. And I superseded these two lines here just to kind of demonstrate that so we could see, in fact, at the same stage of development, the capital cost per kilowatt hour of the vanadium flow batteries is lower than lithium ion. So as this industry develops, we're going to continue to see its economics improve. Vanadium is being used in a number of other energy storage applications, in sodium vanadium phosphate batteries. This is a company that's very interesting, putting vanadium oxide in the anodes of lithium batteries and resulting in very fast charging, long life cycle, high energy density for some very energy dense applications. Vanadium production's gone up dramatically, primarily because of China in the last few years. On the consumption side, this is our forecast for capacity for vanadium flow batteries going forward. I'll tell you, this forecast is at the low end of the spectrum of forecasts that are out there. We convert that to vanadium consumption, and this chart's showing us by 2030, we're going to need about 135,000 metric tons of vanadium to supply vanadium batteries. And again, today the market's about 133,000 tons. So we're talking on this forecast, again, which is very conservative, of a doubling in demand. Here's some data on production or consumption of vanadium, steel industry, titanium industry, chemical industries, energy storage. Looking at what we expect for the next few years, the vast majority of the growth is going to come from this new application. Again, the rebar market's in a bad spot in China right now. Global steel production isn't going to grow as it has in the past. And so we're going to see somewhat stable demand, slowly growing in the traditional markets, but a huge opportunity on the table here. This is kind of the takeaway here. We look at the forecast from traditional markets, looking at energy storage layered on top of that. And the green line shows us what the production forecast looks like. This forecast is assuming no new sources of production, but everything that's out there comes online and runs at full capacity in the next few years. And you can see we're in a position where we're going to hit the wall. Looking at inventories, vanadium inventories have grown the last couple of years dramatically. We can look at the inventories on months of consumption, which I think makes a lot more sense. On a cumulative basis, really since the last time the price was at that, quote, normal long-term price of $8 to $9 to $10 back in 2021, we've accumulated about 18,000 metric tons of vanadium of inventory. And that's somewhere around 2 months of global consumption. So if we go back to the previous chart, you look at what we expect to see in terms of demand. At some point here in the next couple of years, we're going to hit the wall and we're going to go through the cycle again. Don't let anybody tell you there's not enough vanadium out there to feed this new market. Vanadium's the 22nd most abundant element in the Earth's crust. There's more vanadium in the Earth's crust than there is lithium, manganese, cobalt, or any of the other battery metals. There's deposits around the world. There's resources or reserves to supply us for about 150 years based on current consumption levels. I'm going to skip through this. There's a couple of videos here looking at some new projects. We don't really have time to go through the videos here, but you'll want to download this if you can and look at these videos. In the Middle East, we've got very interesting projects going on here in terms of recovering vanadium from waste, from burning vanadium-bearing oil, and using that vanadium to build vanadium batteries to support solar grids. A very, very interesting story. This is one of my favorite new projects out there, Australian vanadium, and I think Graham will be talking about this in the fireside chat shortly. One of the most developed opportunities out there for new vanadium production. I like to look at this because it's different. It's just a different type of ore than most of the vanadium projects out there. So it's quite interesting if we look at some of the claims they make. And again, this is demonstrative of the fact that there's vanadium all over the world. This is a potential project in Northern Europe that looks quite interesting. So I'll just skip through all this. Vanitec is a organization that, again, we'll skip the video. It's a group of producers and consumers of vanadium that work on health, safety, environmental issues. There are a number of membership classes. If you're interested in the vanadium space and you fall into any of these classes, it's probably cheaper for you to join Vanitec than it was to buy your plane ticket to come here. So if you're interested in Vanitec, you can reach out to the website, to John, or you can talk to me. And with that, I'm going to leave it. Thank you very much.
That was very impressive, Mr. Pellis. Thank you so much. Would you like to take a seat here up on the stage? You've got your microphone on, so that You're the first here, so you can make your own choice, take the best chair. So what we're going to do now is have a fireside chat. So most of you know the premise behind a fireside chat. You know that it was developed by, going all the way back to US President Franklin D. Roosevelt, who used relaxed and conversational style broadcast to cut through the noise and bring the public in on the big issues of the day. So that's what we're going to do here, and we'll do it over the next few days. So we're dialing down the formalities and we're going to turn up the insights. I'm not going to be in charge of these chats. We've got an expert seconded to do this very, very well. So Susanta Mazumdar from Tribeca Investment Partners is going to guide us, and I'll let you introduce him to the one remaining panel member whom you haven't met yet. Please make them all very welcome.
Good morning, ladies and gentlemen. It was a very good detailed presentation from Terry. We'll probably prove a few questions, but I'll take maybe a minute to introduce both Terry and Graham. On my left side, Graham has been appointed CEO of Australia Vanadium Limited in 2022. He held some key leadership position in IGO, Primera Group, and Pilbara Minerals. Graham has experience both in energy and metal background, with production manager in Midwest Vanadium and energy management in Epcot Energy, a leading Canadian retailer. His both experience in energy and resources sector is a great asset for the AVL's mining to battery strategy. Terry has a very long 37 years of experience in vanadium industry, started with US Steel, 2 decades in Stratcore, which was taken over by Evrad. He set up TTP Square in 2010, and then he later on joined Atlantic Limited executive team and founded US Vanadium, which in turn acquired assets of Evrad. So really long experience in vanadium industry. Probably I will start with a question which you dealt it a little bit in the beginning of your presentation. Means vanadium flow battery has been there for almost 40 years, and it's been connected with the grid even for like 20 years. Why we are seeing such an excitement in vanadium flow battery, particularly in China, and what it means going forward, both for China and as well as for the world?
Yeah, so I think there's really 2 factors that are driving the inflection point in the demand for vanadium in these batteries right now. One is the maturation of the supply chain. As I said, we've seen the first gigafactory now in production in China, and when we look at capital costs, there's tremendous opportunities for the cost to come down. The battery people, by and large, will tell us that they're in a position where over the next couple of years, capital costs for the system, the hardware side of the system can drop by as much as 70%. So we're seeing the maturation of the supply chain along with the development of really a new market. That new market is long duration storage at grid level. And again, when we get to the point like we have in Southern California, where more than 50% of the supply of electricity comes from renewable but intermittent sources, we have serious stability problems. We need to find a way to take that power that we can produce in the middle of the day or when the wind's blowing and deliver it to the late afternoon when the peak demand shows up. And we're talking about many, many hours of duration. We're also looking at opportunities now for seasonal load shifting, producing a lot of solar power in the winter or in the summer and delivering it back to the grid in the winter. And this is a perfect application for vanadium batteries. Great thing about these batteries are they don't fade. There's no loss of capacity over 30,000 cycles. Essentially, the vanadium can be cycled an infinite number of times. You hear people talk about vanadium being expensive, but if you think about cycling it an infinite number of times, and we look at the levelized cost of storage, the cost of the vanadium per cycle approaches 0. So as we go forward here, we're seeing really the confluence of those 2 issues, the supply chain maturing and the long duration grid level storage market taking off.
I think just the related question is going to be how it compares with lithium phosphate battery as well as nickel battery, and I think invariably that comparison will come in terms of scalability, cost, and safety. So whoever wants to go first.
I'll jump in there. We spend a lot of our time working on what are the economics of the battery against lithium ion phosphate applications. That is the dominant use case in battery energy storage right now. The reality is That works up until about 4 hours, and it may work up until 10 hours. There's a crossover point where vanadium flow batteries become very attractive on a levelized cost of storage basis, and that's how the industry thinks about these batteries. At about 4 hours, you become very competitive, and then ultimately the other merits of the battery then stand at the front, which is that you can augment duration. And so if you're a battery developer, you're often thinking about how do I expose myself to the maximum number of revenue stacks in any application. And the more we work with end users on the energy side, that's turning out to be a really critical asset of the vanadium flow battery. It can do everything a lithium-ion battery can do, but in year 3 or 4, if the market goes to 8 hours or 10 hours or 12 hours, you can actually respond to the pricing mechanisms and build your financial models around that. The ability to augment at later points in time with lithium-ion is really not possible, or very difficult at best and expensive. With vanadium flow batteries, very cost effectively, you can simply add additional electrolyte in tanks and augment to longer duration, and that, if you're running economic models in a BESS application, is pretty powerful. And then you layer on top of that, in particular, the location of Australia, using as an example, you will see procurement teams for BESS operations looking at local content as a factor. So if you stack up on cost, with lithium-ion, you're probably going to struggle to get even 20% local content if you try hard. With vanadium flow batteries, you'll, without even getting out of bed, end up with above 70% local content. So if you can stack up the economics, you then have a non-flammable product that has high local content, is augmentable to match the market in the future. And the more we work with end users and big gen tailors in Australia, the more they realize the levelized cost is competitive, and the more they look at the other options that are available once you install the flow battery, and they get very excited. And to Terry's point, the scale's already there. Ronca Power, as an example, is just deploying them at incredible scale. And there's over 100 other flow battery manufacturers in China and a bunch of international manufacturers who are scaling up as we speak. It's very exciting.
Anything you want to add?
I'll just add that last week I also had the chance to visit what was until a few months ago the largest vanadium flow battery deployed in the world. This is a 800 megawatt hour system in downtown Dalian, in the center of the city. And the use cases here are black start, emergency power backup, load shifting. It's been operating for 8 years. It's in an environment where there's an issue with grid power. They're in a position to instantly jump in and restore the grid. You need to have that sort of storage near the load, and that's a place that's impossible to put a lithium battery at this scale. So, the other factor here, I think, is you look at the whole safety issue.
Yeah, I think it's very interesting because even Singapore is looking at in deploying vanadium flow battery. One of the things is Singapore is land constrained, so putting underground, and you can put a large battery, and safety is definitely paramount. So that's why vanadium flow batteries stacks up quite well.
And I think in the next couple of months you're going to see some announcements of some very large-scale vanadium flow batteries in conjunction with data centers, again underground, where we can't put a lithium system with building and people on top of it. So there's numerous use cases where these systems are really cost effective today.
Understand. You touched upon a little bit of demand supply. So question is actually both of you. What's the long-term demand supply for vanadium? And secondly, what's the kind of benefit of having integrated operations like AVL has got, and the difficulty in terms of processing vanadium ores versus lithium? So question both of you.
Maybe I'll go first, and I would like to comment that perhaps something to think about is not even the long-term, but the short-term situation with vanadium supply. By way of example, Terry just quoted an 800 megawatt hour flow battery, which is currently the largest in the world. We're actually seeing, for the first time outside of China, now a 500 megawatt hour battery that is now slated to be built in Western Australia. So not far off the largest in the world, going to be built soon in Western Australia. And to the point of vanadium supply, that battery is almost 2% of the world's vanadium supply. And even in the current, what would be called slightly oversupply situation in vanadium, if you go out on the market right now and try and procure oxides, it actually becomes a supply issue relatively quickly for one single battery. And at Australian Vanadium, we're looking at 4 or 5 battery options on the east coast of Australia that are all significantly larger than that. So it doesn't take much, even in the short term, to get that adoption rate continuing even on its current pace in China, which is set to accelerate significantly in the very near future. If you layer on that other jurisdictions like Australia, where the renewables penetration is already significantly higher, and there are market mechanisms for 8-hour batteries plus, data centers that are asking for 16-hour batteries, people like Rio Tinto wanting 48-hour batteries, it's, for me, a very near-term vanadium supply issue. And then there's a longer-term piece, which I'm sure Terry can comment on.
Yeah, if you look at the supply base for vanadium, about 70% of the supply is really a byproduct from steel mills in China and one mill in Russia. And we know what the situation with steel production in China is right now. So we're not going to see any growth in supply from those sources. It's probably going to be the opposite given the situation here. And again, we've seen the data on the supply side, even with the most modest forecast for growth in vanadium flow battery demand. We're going to be in a position where, this cycle of overproductions, really this year, if you look at the numbers in the presentation, we expect to see a very balanced market this year. We have built up some inventory over the last couple of years, but clearly by the time we get into, sometime next year, that excess inventory is going to be gone, and then, we're going to go through the cycle again. And I can taste it, I can smell it, it's right there.
Yeah, I could see that your price chart, like 80% probably down from its peak in a couple of years back, so probably hitting bottom. I think one thing which probably, Graham, you can talk about means you yourself is setting up the 50 megawatt battery, right, downstream, and what's the advantage of running an integrated operations like AVL from mining all the way to the battery, and the challenges as well in terms of processing ore like vanadium?
So right now the challenge is about doing what they already do in China, and that is, if there's all the large energy sector players that we talk to in Australia, it's no longer a question of is there technical risk, which is the key benefit of flow batteries. The technical risk is gone based on what China's doing. You can go to the facility that Terry was at last week and you'll be a believer. And you can go to Ronki Power's fully automated factory and see the cost base coming down and where the future is going to be. So it's just, can you actually deliver this in Australia? The way we've addressed that is by literally fully designing and costing a 500 megawatt hour battery using local contractors for construction design, proven battery suppliers, and being ready to deliver. So what's missing outside of China is that off-the-shelf solution, which is what we're doing. So that's the downstream side of our supply chain, which we're most excited about, because at current vanadium prices, there's a very, very compelling battery sector levelized cost of storage. We've put in all our modeling realistic pricing. To Terry's point, the long-term average price of vanadium is $10 to $12. Even if you put that in a battery model, it's still very compelling for all these long duration applications. So then for us, the challenge is, how do you link up a supply chain? And it does come down to vanadium. If you look at these batteries, they are very simple. They're tanks, pumps, piping, and vanadium. And if there's a way to deliver the supply chain, is simply by making lots of vanadium oxides at high quality and the lowest quartile price. And that's what we're setting out to do in Western Australia. And we've established electrolyte manufacturing there already. And I think for me, in the Australian context, there's no other battery supply chain you can do that. You can literally cost effectively, with structural cost advantage, make electrolyte locally. Yeah, we've done it.
Tony, we have 2 minutes. Anything you want to add? Probably one final question is that lithium is very popular in the mobile applications. Do you see at any point of time vanadium can probably start competing on lithium on mobile, or it will be always the static operations?
Well, what we're seeing now is people putting lithium in various batteries that are for mobility. Right now, this technology, vanadium flow battery, the only mobility application is seagoing vessels. That's a very interesting model. We can talk about that later if somebody's interested. But primarily, we're looking at vanadium now going into both cathodes and anodes of lithium-ion batteries. And the purpose of this is to really address the two major shortcomings of lithium-ion batteries right now. One is the energy density, basically doubling energy density, which means I can drive twice as far before I need to recharge, and dramatically decreasing the recharging time. We're talking about 5 to 8 minutes to recharge a battery instead of an hour or an hour and a half. So There's some really exciting things out there. You know, those are still a bit down the road, but there's some really, really exciting things. Vanadium is a very interesting element. It's stable in 4 states of oxidation. It makes it usable in many electrochemical applications.
So effectively what you are saying is that vanadium can move even from the static to mobile applications and probably can as a complement to the lithium-ion battery rather than just the computing.
Exactly.
We are almost like very close to that. We have got 18 seconds left, so we finished before the timing. Thank you very much, Graham, and thank you, Terry, for having this interesting discussion. Thank you very much.
Thank you.
Thanks.
Thank you. Thank you.
Thank you. Thank you, Susan. Wonderfully chaired, and thank you very much, team. And if you want to hear that conversation back again, you can always go to our webpage and you can share it around too, because it's a great one for people to get in contact and get a feel for vanadium. Right, next up, not vanadium, but this is another company which I know you'll be very interested in, St George Mining. Now, they have just delivered a high-grade maiden resource for niobium and rare earths in Brazil at their Brazilian project, and that's placed them right into the global spotlight for critical minerals. It's a shallow, high-quality deposit, low-cost development potential, and growing demand for clean tech and defence industries. And understandably, it is gaining serious traction. And I'd like you please to put your hands together and welcome their Executive Chairman, George Pranaus. Please make him welcome, everyone.
Thank you very much. Thank you. Yeah, we're very excited to be here and present our new project to you. It's a niobium rare earths project in Brazil. It's an advanced project, which we think is a company maker project. It's the kind of project which we think can deliver a high multiplier return to our investors and shareholders. We only completed this project in February 2025, the acquisition of the project, so brand new for us. It's got a number of strengths, which I'll quickly go through. We're in a great location. So we're in Brazil, particularly the state of Minas Gerais, which is the #1 mining state in Brazil, the Tier 1 jurisdiction. We're right next door to a company called CBMM, which already produces about 80% of the world's niobium. So we're in an established mining region in an established long history of niobium production. We have already economic mineralization with economic grades. It starts at surface, and yesterday we announced our maiden JORC resource. There was previously a resource out there from the historical work at 28 million tonnes. We've quickly increased that to 41 million tonnes. The metals we're in are niobium and rare earths. Those of you who know us from our Western Australian operations, we're exploring for lithium and nickel, not good commodities at the moment. Niobium and rare earths, very great, strong growth outlook, very stable prices. We've quickly assembled an in-country management team. We've got more than 80 years of combined experience. Some of these guys were ex-CBMM next door to us, so they know all about producing niobium. They know all about the Arusha region. We've also signed a cooperation agreement with the state of Minas Gerais itself to expedite our project approvals. So we think this is an exceptional development opportunity. We've got infrastructure all around us. We're not in the middle of some remote area. We've got a proven long history of mineral production of niobium. We think this is an opportunity to create a mine very quickly. So, as I said yesterday, we announced our JORC resource, our maiden JORC resource. So this is probably the most important thing for any mining company that has aspirations of going into production, to have a resource. So this is a very significant resource, 41 million tonnes, both of niobium, head grade of 0.68%, but you can see the measured and indicated portion is actually quite high grade, over 1%. And also the total rare earth resource is quite impressive, about 41 million tonnes at 4% TREO. If some of you are familiar with hard rock rare earth deposits like Lynas, Mount Weld deposit in Australia, their head grade's about 5%. The Arafura Nolans project in the Northern Territory is about 2.6%. So this is a very, very impressive grade that we have, and very impressive tonnes. There's 280,000 tonnes of contained niobium and 1.7 million tonnes of total rare earth oxide. And this is only the beginning. Only 10% of the project has been drilled out with close space drilling, so we think there's an awesome opportunity to increase the scale. The other great thing about the mineralisation is it starts from surface. So we're not 500 metres underground, we don't have to consider underground operations. It starts from surface, and the JORC resource itself is modelled only down to 100 metres. We know there's mineralisation beneath that, so we will drill more and expand the resource at depth. But the fact that it's at surface, it's unconsolidated rock, which means it's free digging, there's no blasting required. It's going to be pretty easy to mine this. This is a plan view map of the tenement area, and again it emphasises that only a small portion has been closely spaced drilled. So there's still potential to significantly increase the scale of the resource by drilling out the rest of the tenement, both along strike and at depth. We'll be starting our first drill program very, very soon. Some of these grades we've been seeing are phenomenal, 80,000 ppm or 8% niobium oxide, and over 300,000 ppm in the total rare earths. So we're in a great location next door to us. Just backtrack. This is hard rock carbonatite mineralisation. It's not ionic clay, so some of you might be familiar with the Brazilian ionic clay projects. That's not it. The comparison for us in terms of rare earths is Mount Weld, the circular carbonatite hard rock feature. And in the niobium space, the comparison is WA1 Resources in the West Arunta region of Australia, again, carbonatite-hosted mineralisation. So typically they're a circular feature, as you can see in that map, about 5 kilometres wide. CBMM, the world's leader in niobium, is there on the eastern side. On the western side is Mosaic, a big fertiliser company listed on the New York Stock Exchange. They've been operating there for decades. We've got the space in the north there, the red outline. So it's a great location for a niobium production, given the long history of production there. One of the reasons we like niobium is it's only got 3 primary producers in the whole world. So that makes it a pretty tight market. The world leader is CBMM. They manage the price very, very well. It's very stable. We think that's a great space to be in. So what is a niobium mine worth? On that table there, you can see what Asian buyers paid for a stake in CBMM back in 2011. US $1.8 billion paid by a Japanese-Korean consortium for a 15% stake in CBMM, and $1.95 billion paid by a Chinese steel consortium for a 15% stake in CBMM. That's back in 2011, so in today's money it's probably a multiple of that. It just shows you how important niobium is to the world and how much money they will pay to get a foot stake into it. The main uses of niobium, ferroniobium is about 90% of the market, 12% is niobium oxide. Ferroniobium is used to strengthen steel, so for pipelines, for really crazy looking buildings like the Marina Bay Sands, that's only built because of the niobium oxide, water resistant machinery, and also for weapons. Niobium is highly temperature resistant, but also strengthening. Niobium oxide is used in more high-tech applications, superconductive magnets, MRI equipment, etc. And you can see from that price chart there a very stable 10-year history and 10-year forecast for the niobium price. We've quickly put in place an in-country team to deliver project delivery. Tiago Amaral, Adriano Rios, Carlos Arroyo, and Ricardo Nardi, all ex-CBMM employees. They've got a long history of experience in mineral processing, in mining, in engineering. They've given us 80 years of experience combined. So we're hitting the ground running with a real depth of knowledge to deliver the project. We've also got an Australian team with Brazilian credentials, Caio Paul Arroyo and Wandeli Basso, our geologist. We've also added to as an advisor to our board, the ex-Minister of Mines in Brazil, Mr. Adolfo Saxida. So that's a great opportunity to manage the political regime there. And we've also got one of the best permitting advisors, Mr. Germano Vieira, who used to be the Secretary of the Environment. So we've got a top-flight team which can deliver project completion. Tiago and Caio Paul Arroyo are here today, so if anybody's got any technical questions about Brazil, come to our booth and ask them. One of the important things we did to de-risk the project was to sign a cooperation agreement with the Brazilian government, the state of Minas Gerais, I should say. So they've agreed to expedite our project approvals in exchange for our investment in the state to build this mine. They've done this with a couple of other companies. The famous one was Ladin Resources. They got their approvals through in 9 months instead of the typical 3 to 4 years. So this is a wonderful environment to be operating in. You don't normally get this kind of cooperation and support from the government. So it gives us real confidence that we can expedite our licensing. We've already established development partnerships. Industry participants can see the value of this project, the advanced nature of the project, and it's an opportunity to be a near-term producer. There's 2 scientific agencies in Brazil, Embrapa and Senai, who have agreed to help us optimise the flow sheet so we can produce both niobium and rare earths from our high-grade mineralisation. We're also part of the permanent magnet facility in Brazil. It's the first permanent magnet program in Latin America. We've also signed up with a company called Xinhai Mining Technology, one of the world leaders in the design and construction of mining plants. They're our preferred EPC contractor. And we've also signed up with a giant steel mill, Fangda Group from China, and also one of the specialist trading ferroalloy trading firms. So industry participants are coming to us. They want to help us develop this project because they can see that the product we're going to develop is going to meet market. So just in summary, initiatives we've got underway to deliver this project. The permitting process, we've got 2 minor concession applications in the system. We're engaging with government to get those approved. We'll have lots of progress on that in 2025. The resource modelling, we've announced our maiden JORC resource, that's done. We'll get on the ground and do more drilling, and I'm pretty sure we're going to expand that resource. We think we can see at least a doubling in the very short term, and possibly much, much bigger than that over the longer term. We've got a pilot plant already there, which the previous owner had. We're going to put that back together and start producing sample products, so we'll be able to go to the market and show them our sample products and start getting a little bit more confidence about the marketability. We've already signed up some strategic investors and corporate partners with MOUs, and we'll be looking to take those a little bit further during the course of this year. And we've started development studies as well, environmental studies, geotechnical studies, all the things you need for a feasibility study. If all goes well, we'll have that feasibility study by the end of the year. Again, that just underscores the advanced nature of the project, the high quality of the project, and our ability to get into production very quickly. That's a quick company overview. Our share price is about 2 cents at the moment, our market cap about 51 million. Again, I think that's a pretty low valuation considering where you see some other companies with similar resources. Have a look at Arafura Rare Earths, have a look at Brazilian Rare Earths, have a look at WA Wind Resources. And when you compare their resource to ours and the fact that our resource is, we believe, probably the first one to come to market out of all of those, you see that our valuation is pretty low. We offer a great opportunity, I think, for a high multiplier return to our investors. So that's it. We're building a globally significant niobium and rare earths company in Brazil. Again, we've got a booth outside, so feel free to come and talk to myself, Tiago Amaral and Kawi Paul Araja if you have any questions. Thank you very much.
Thank you very much, John Pernas, and thank you for not correcting me there, everyone as well, John Pernas. Team, we're going to talk about a mashup that perhaps we didn't see coming a decade or so ago, machine learning and mining geology. But here we are, it's not just buzzwords anymore, is it? So just in the last few weeks, the US Geological Survey dropped news that AI is now helping them to speed up critical mineral assessments, so you can think months of work done in just days. And that is the kind of technological advancement and efficiency that we as investors dream of, getting that information quicker. So if you're ever one of those people that's perhaps spent time looking at a 10,000 sort of row spreadsheet of drill results and thought, gee, there must be a better way of learning from this one and then reading this one, you're correct. And that better way is what we're going to talk about right now. And our expert to guide us through this process is the Principal Geologist at SRK Consulting, Yangjian Zhu. So would you please make him very welcome. He's going to talk us through how AI and machine learning is going to optimise geology. Thank you, everyone.
Thanks, Chrissy. Good morning, everyone. Today I'm going to have a brief introduction about the application of machine learning in mining geology. So I'm going to go through firstly I will have a brief introduction about what is machine learning, and talk about where can we use it, and finally I'll show some cases about what we have done recently. So what is machine learning? So machine learning is the process of training computers to let the computer learn by itself by feeding them large of data. So it allows the computer to learn from data and to recognize patterns to help us make decisions or predictions. So we can say that it's data-driven. So it relies on large data sets to train models. So on the contrary, what we do before is experience-driven. We rely on experts to give us the opinions on what kind of thing we need to do. Right? So machine learning can be divided into 3 categories. So the first one is supervised learning. So we supervise the whole machine learning, the training procedures. We give the machine labeled data to let the machine know which data is good, which data is not what we want. So based on this labeled data, the machine can predict the labels for us when we feed them the new data. So we can use this to do the classification and regression. So another usage is categories unsupervised learning. So we do not give the data labeled. So we just feed all the data together into the machine. So let the machine to find the hidden patterns for us. So we can use the unsupervised learning for clustering and dimensionally reduction like PCA analysis. So another usage is reinforcement learning. So this is like the AlphaGo and the self-driving cars. This like the machine learns through the interaction with the environmentals and to maximize the rewards, to update the model for us. So we can learn that what machine learning do is that we feeding them the data into a black box. We don't know what happens to the black box. We just train the model and they give us a result. So we just give them the data and they give us a result. So where can we use it in mining geology? Let's look at exploration progress for our greenfield project. What we need to do first is trying to identify our target area, right? So we based on regional data, based on remote sensing, geophysical data, geochemical data, and geological mapping data. So once we get the target area, what we want to know next is we are trying to do some journey to get some data underground. So we do logging, we do sampling and testing, get the assay data. Once we get the assay data, we want to define the resource. Right? So we do the resource estimate. So we need to do the data analysis, the geological modeling, and grade estimate. So like I said before, all the experience-driven things can be helped, assisted by data-driven, by machine learning. So which kind of areas that we can be helped by machine learning? The identifying target area, right? We used to helped by the expert geologists. Geological mapping, also, and logging, and all the resource estimate process we can be helped by or assisted by machine learning. So let me share a case that we done in Western Australia. It's a lithium target area identification. So the project is located near the Mount Margaret area in Western Australia. Before that, I need to have a brief introduction about what is remote sensing. So remote sensing we use a sensor, mostly from the satellite or some airborne near surface, to collect the electromagnetic waves from the air to obtain information about the Earth's surface and atmosphere. What does this mean? So we know that rocks on the surface can absorb or reflect different bands of electromagnetic waves. So when we receive these waves from the satellite, from the sensors, actually we can identify different rocks based on these electromagnetic waves. We call it the characteristic spectrum. So what we do before is experts, they can do the combination of different bands or do the band ratios to try to differentiate different rocks from based on these electromagnetic waves. But now we can do this by machine learning. So this is different bands received by the different sensors. Mostly we have the Aster, we have nanosat 7, we have nanosat 8. So what do we do? Firstly, we need to find a non-mineralized area. So we tell the machine that this area's characteristics is what we want. So we put this area into the model, into the training model. Let the machine learning the patterns, inside patterns. Then it gives us a classification model. So it tells us, okay, maybe this part of area are what you want. Very similar to the already known mineralized area. So then we feed them the new data, the new area. Let the machine to predict the target area for us. So this is the basic idea. So this is the result. We can see that the green line outlined area are the areas predicted by the machine learning. And all the dots are the soil sampling samples. And we can see that the red ones are above 100 ppm and 500 ppm. So we can see that it matches reasonably well for the soil sampling result. So another case is called VMAP. This is what we do together with the UK government and Exeter University. So it's a program that we trying to find the probability of finding gold in Kalgoorlie Golden Belt area. So what is VMAP? VMAP it uses the Bayesian statistics. So what is Bayesian statistics? What we need to know is the equation on the right. So if we have the probability of A happens and the probability of B, and also we know when A happens, what is the probability of B? Then we can calculate when B happens, what is the probability of A? This may sound a bit confusing, but I will explain later. We don't need to worry about this. So the advantage of the Bayesian statistics is that we can calculate the posterior probabilities based on prior knowledge and new data. So it allows us to continuous updating and improvement of the model. So Bayesian probability, normally we have two types of the probability. The first one is the frequentist probability. That way, it's based on the repeatable tests, like the toss coins. We can toss many times and calculate the probability. Another one is that the test cannot be repeated. So on this case, we can use the Bayesian probability. So like we say, what is the probability of the Trump wins? So this case cannot be repeated too many times, even when it already repeated one time. Right? So in this case, we use Bayesian probability. So I'm going to have a very short introduction about the practical application of Bayesian statistics. This is about a flight, AA447, that disappeared of the Atlantic Ocean in 2009. And over the following year, all kinds of methods were used by different governments trying to search the wreckage, but it failed. So then it comes to use the Bayesian statistics, and so based on the previous finding, and they built a Bayesian statistics model and gave a location of the wreckage area. It's on the left side. So after 2 weeks, they found the wreckage. So this is mostly because of the Bayesian statistics based on lots of the failures. So if you have more data, and you can update the model, so improve the prediction. So what do we do for the MWAP? So this is what we do, but we don't need to worry about this. Just trying to scare you guys. What we need to do is know about this equation, like we said before. So we have PA. What is PA? PA is the probability of finding a gold mine in the Kalgoorlie Golden Belt area. So it's based on this is the prior probability that derives from our build system model, machine learning model. So then we have PB. What is PB? PB is the evidence. It's including the exploration maturity and known deposits. So we can calculate the PBA. So when for knowing method, for knowing mine sites, what is the probability of the evidence, right? What is probability of evidence? So we got the PBA. Then we can calculate when given an area, the area's evidence is here. So what is the probability of finding gold in this area? So this is how it works. So we don't need to worry about this. So yeah, based on this equation, we have the PA, which is private knowledge, and we have PB, the evidence, and also knowing gold deposit here, and we can get the PBA, right? And we can calculate, given our area, what is the probability of finding gold in the gold belt area. So that is all about the exploration. So the second thing we do is that machine learning can do is logging. So it's pretty much the same. We give the machine the label data. This is supervised learning. So we label the picture of our coal tree. This area is the coal veins. This area is fracture, and give them and train the model, and the machine can predict the label data for us. When we give them the new coal tree photo, and then it will predict which area is the cause, what is the area is the fraction area. So we can also do the lexicological logging. So this is the comparison of the geological distribution and the machine learning logging. This is also iteration logging and RQD logging. What do we do? And another very important usage for machine learning is graded interpolation. So it's pretty much the same. We feed the data, feed the drill hole assay data into the machine, and let them learn by itself and predict assay like gold grade for us. So it may be challenging for now because the job code requires the transparency, but we actually don't know what happens inside the black box. But I think, in my opinion, I think a very important future for this is for the grade control model, because we have lots of the production data, and we can train the model very well, and you can update the grade control model very frequently, and accuracy maybe even accuracy than the geologists do the model by themselves. Yeah, so that's pretty much it, and there's some takeaways. So there are advantages for machine learning that you can improve the efficiency, you can recognize the pattern for us and the motivation, but it also have these advantages that is depends on lots of data, and we maybe have very poor have low transparency. We don't know what happens inside the black box. And you also have a risk of overfitting. And considerations, we need to give him a very good quality of data. We need to validate the model and transparency. And also, in my opinion, is that each project maybe only there is no one model for each project, because every project are different. We have to feed them different data and build them their own model. Yeah, that's all. Thank you.
Thank you. That is absolutely fascinating. I was actually on the phone back to friends who are geologists in Australia saying, you've got to log in, you've got to watch this, you've got to watch this. So they'll be watching you a little bit later, because a couple of them are stuck in South Australia currently on projects. But I know that's the sort of tech that's going to make such a big difference. Tim, we're going to take a break for about half an hour. You hear the bell ringing. When we come back into this auditorium, our second auditorium will also get underway. So if you've got your programs in front of you or on the app, you'll see that we've got government and industry presentations in Auditorium 2, and they get underway at 11:30 with Greg Idness, who's the Managing Director of Saskatchewan, the Singapore Office of Government of Saskatchewan. So he'll be having a chat about government and interactions there. So have a look at that program, see if anything interests you, and you're more than welcome to go over there, and you can flip between the two rooms. You can flip between all the rooms and our exhibition centre as exhibition hall as well, and those private meetings. If you feel like having a one-on-one with any of our presenters you've seen on stage, go and book one. This is a great opportunity. Thanks everyone, and enjoy your morning tea.